After a long weekend characterized by Bitcoin hitting record highs, oil hitting pandemic highs, earnings speculation for the following week, Elon Musk proposing to talk to Putin via Clubhouse, and dogs running around without leashes, we now have a week upcoming with intense opportunities. And with that, many are coming from far and from wide with one simple question. And do you know what that question is? Well, that question is what? What, Charlie, are the top 3 stocks for this week? But first, we must do a quick recap of some of our plays from last week. Okay, first, Mara, lovely Mara. I never talk about Mara, but she's lovely. Well, Mara had a little bit of a panic last week and mostly recovered, but this play is going to $60. And with Bitcoin doing well over the weekend, it's possible that we hit that $60 this week. But if it doesn't, though, we are patient. At the end of the day, this was a play that we called out on January 3rd, and it was only trading at just under $11, and now it's trading at nearly $40. That's already huge, so there's no reason to be impatient with this. We've already gotten a huge run. Okay, next, Clove, Clover Health. So Clove was hit by a short seller report, which was mostly ridiculous in my opinion, as are most short seller reports, short and distort. The short seller report highlighted some weaknesses that pretty much all of its competitors would also have, and didn't talk at all about the actual value proposition that Clover brings to the table. At the end of the day, Clover's next generation software allows them to improve outcomes and lower cost for healthcare, and it's quickly capturing share from many of the main competitors. And when I say improve outcomes, I don't mean foofy, like, oh, this company's making the world a better place. I mean, it literally has the numbers where it's improving outcomes. Clover gives very real healthcare savings. It's the fastest growing Medicare Advantage plan, and Medicare Advantage plans overall are a large growing market. So when you're the fastest growing Medicare Advantage plan in one of the largest growing markets, you have a lot of opportunity. And their plan and structure is to substantially improve this in 2021 and substantially expand the markets that they have access to. Clover is a winner, and in my opinion, this is going to $20 easily. But you do have to be patient. You have a lot of people that want Clover to be worth $0 right now. Why? Because there's a lot of people betting against it. Once all the drama goes away, I see this at $20. But be patient for that. Okay, lastly, our PSTH play had a very nice rally on Friday. If you remember, this is our Bill Ackman SPAC play. However, while this was a nice bounce, it still doesn't have an official announcement yet on who they are merging with, so keep an eye out for that. There's more opportunity here. Okay, folks, well, anyways, it's time to get into this week's plays, and the only thing that I ask of you in return is that you hit... What should we hit? That ravishing like button. And also don't forget to subscribe either. It really warms mi corazon when you guys subscribe. And quick plug, if you were looking to learn how to trade with our ground up lessons, private chat, daily morning briefings, and of course our price targets, well, I will go ahead and put the link to ZipTrader U so you can go ahead and check it out. But anyways, number 1, Palantir. So Palantir will be reporting earnings before market open on Tuesday. Who cares? Well, I care. Why? Well, because my price target on this play is $55. This beatdown last week has given us some extra upside to said price target. But generally speaking, PLTR follows a very consistent pattern. It gets huge hype on a catalyst, then it gets beat down after the catalyst, and then you get a new catalyst, and then it goes up again. That means that if you can get this after it's cooled off, it's almost always a good idea to buy it. Now, in terms of the earnings that are coming up, I have a very pragmatic approach. It's likely that we have some pre-anticipatory running up to earnings, but I think the earnings reaction itself is a bit of a flip of a coin. Since I see PLTR at $55, I don't really care what happens on earnings. If PLTR gets beat down on earnings, I see that as an opportunity to buy more. If they go up on earnings, I see that as an opportunity to bask in being right sooner than expected. In terms of what's actually happening with the company, PLTR has consistently picked up new partnerships and contracts. And we've covered this in the past, but you're going to see more and more and more of these partnerships, and this is going to be more and more reflected on future earnings. The next couple quarters are going to be even better than this quarter. Why? Because you have more partners coming in. And you have more partners, that means more moolah. However, PLTR is also a stock that the mainstream analysts and a lot of the funds love to hate. Why do they love to hate it? Well, because it's politically controversial. Palantir has a very, very wide array of clients, and they're constantly getting new clients. And they come from many different sectors. Yet, every single time an analyst covers this, they have to focus on one thing. The fact that they've worked with defense contractors and ICE and so on and so forth. When they cover other companies like Microsoft, they don't talk about how a lot of law enforcement agencies and how a lot of different defense contractors use computers from Microsoft, with operating systems from Microsoft. Regardless of your political opinion or your opinion on these sort of controversial topics, at the end of the day, it's the clients that use Palantir, not Palantir that use the clients. If somebody's using a Palantir platform to do something that you don't agree with, is that really Palantir's fault? Look, folks, I'm not telling you what to think. I just think that it's not fair for analysts to blame Palantir platforms for having controversial clients, while at the same time not blaming anybody else that provides anything to these same controversial customers. Shirt providers, electricity providers, computer providers, car providers, Ford. Why are they not saying Ford sucks? Well, they are saying Ford sucks, but why are they not saying Ford is this awful company because they provide vehicles to a lot of these agencies? It goes on and on, the amount of companies that contract with these agencies that are controversial, but nobody even bats an eye. But now Palantir, that does the same thing, is becoming this huge villain. And really, there's only one reason for that, because people don't understand the software. It's easy to pick on a new technology and be biased when you don't know what the heck it is. So anyway, sorry for the rant. I just get so annoyed when I hear all these analysts and then all these sheep sort of following the analysts and saying, oh my God, it had a bad client. I don't agree with this client, so this company's worth nothing. But anyways, folks, PLTR, in my opinion, is a great deal in the low 30s. Go do some digging on this yourself. I've talked about this many times in the past, and I want to make sure that you're very familiar with what this company does. You can go and look at some of my earlier videos on PLTR. You can look up ZipTrader PLTR. Okay, next, folks, I want to talk about Tilray. The Ray of the till. So as you know, last week we hadn't hit both of our price targets during the uptrend, and shout out to folks who locked in these profits. But now, because of the recent sell-off, we have another opportunity to play future strength in Tilray. The way that I see the MJ sector is we're going to continue to see more and more legalization, more and more regulatory favorableness towards MJ in the next 10 to 20 years, if not sooner. So that means not so much will MJ be a winner, but rather which companies will be around to see MJ be a winner. Tilray's current business model, combined with its upcoming merger with APHA, will make it a massive multinational company with businesses in Europe, the US, and Canada, and to increasingly expand as well. And this merger will cement Tilray as one of the de facto leaders in the MJ sector. And I see the low 30s, especially below 30, as a great deal for this. I don't think it's impossible that we see more selling off, but once it bottoms out, this is going to boom again in a large way. So they also moved up their earnings call to Wednesday, which means we can certainly see quite a lot of opportunity this week. Okay, folks, and lastly, I want to talk about Acic. Now, I'm very excited about this one, and I currently have a long-term position in this. I took a long-term position last week, and I might make future videos completely diving into this because this is actually pretty exciting, but let me explain what this company does. So Acic is merging with Archer. And the goal of Archer is to create affordable and mass-scale electric air taxis. This is another one where it's widely misunderstood. There's a lot of short sellers and, again, analysts that are sort of making fun of this opportunity as investing in flying cars, and they're saying how it's a pipe dream and that flying cars are fairy tales. But the idea that these are flying cars is completely missing the point. These are more like small planes / helicopters than they are flying cars. And people said the same thing about EHang when that started rallying. And look what happened with EHang. It went from like $8 to over 120 in 6 months. Yes, a future filled with flying vehicles where people get transported around, and that's like the main form of transportation. Obviously, that's very far away. But there's actually some immediate good uses with these flying vehicles in the near future, which we'll discuss in a minute. But yes, let's first talk about the potential of having these small flying vehicles everywhere. One of the main problems of modern society is traffic. Traffic congestion is an extremely huge problem that is only going to get worse over time. And with technology rapidly increasing, we are very close to having small air taxis that are automated, electric, and cheaply produced, as well as quiet. One of the problems with helicopters is they're very, very noisy, so you can't have them flying all about. But if you create these little vehicles in an affordable, cheap, quiet, safe way, and get people to actually feel comfortable riding in them, well, the total addressable market would be insane. It's a lot faster to use one of these air taxis than it is to go take an Uber or to drive yourself. For those of you who followed EHang this year, this is basically the Chinese competitor to this company. And this was the company that I talked about a little bit earlier that went from $8 to like $129 in a very short time span. There's obviously investor demand for this stuff, and it's not just in China, it's also right here in the US. The stage of growth with any emerging technology starts with attacking more immediate markets. For example, the helicopter market in the US is about 15,000, but these already built and certified Archer aircrafts are already more competitive than those used by helicopter makers by many metrics: affordability, safety, speed, noise, and so forth. There's many situations where these little vehicles would work where helicopters wouldn't. So these companies start by attacking the helicopter market. They get people comfortable with the idea. They get more regulatory wins, and they keep expanding and expanding and expanding. Archer already has FAA certification, so they're already well on their way. United Airlines has a huge investment in Archer, and it also has an order pending for some of their vehicles. United says their partnership with Archer is aimed at giving customers a quick, economic, and low emissions way to get to airports within its major hubs by 2024. And as I said earlier, we're seeing a lot of other companies around the world test out these flying vehicles. They're making their own flying vehicles. They're investing in other companies that are making them. Why? Well, because it's obvious that over the next couple decades, you're going to start seeing some moving towards this. I don't know how long it's going to take, but it seems pretty obvious that you're going to need better solutions than just having everyone pile up in traffic. But as traders, of course, we have to say, show me the money. Where is the money? And the money with this play right now is in replacing helicopters, becoming a competitor to helicopters, getting partnerships with other companies that could use this. For example, ride-sharing companies. Uber has a similar thing that they're invested in. We've already seen that investors are interested because they rallied eHang up so much. The only question is, when will the mainstream investors see Acic as the next eHang, as the next big competitor in this field? Also, I should mention that although this is one of my plays, a lot of you guys have asked me to cover Acic, so this was the requested ticker of the day as well. If you have another ticker you'd like me to cover, go ahead and comment below and we will do that. Anyways, folks, I appreciate you watching this video. Make sure to treat every stock that we talk about as a dirty battlefield. What does that mean? Well, that means that I can present the battlefields that I think are worth going into and trading. But it's up to you to prepare yourself for battle. I give you ideas on how to prepare yourself for battle and talk about different experiences that I've had, but at the end of the day, it's up to you to train yourself. I don't like the idea of people watching these videos and then dabbling. Make sure that you're not a little Debbie dabbler. Debbie never got anywhere because she dabbled, and people don't realize that about Debbie. You need to not be a Debbie dabbler. Be a productive Paul. Productive Paul went out and started doing things. He started producing. He started getting results. Oh, I had a little bit too much tea today. Go ahead and comment below what tickers you'd like me to cover in tomorrow's video or at the end of tomorrow's video, and I'll go ahead and cover that. And if you have any questions, feel free to reach out to us below as well. You can also join us on ZipTrader Circle. If you'd like to get some free stocks and sign up with a great broker, we do have a link to Webull below. If you'd like to learn how to trade, would like access to our price targets, our daily morning briefings, and of course our private chat, I'll go ahead and put the link to ZipTrader U in the description below. Of course, only join us if you're ready to put the work in. We don't want people joining and then not using the resources. Anyways, folks, have a great day, and I'll see you in the next video.